The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. From the offices of Duke & Duke, 100 South Broad Street, Philadelphia, Pennsylvania. Just one second. Miss Sophia is out in the outer office there. We have a guest? Yes, we do. We have our guest, Norman. We call it to the minute. Winsky is on the line. Norm, are you there?
Yes, sir, Larry.
Okay, we're going to put your feet to the fire, buddy. You were 3 for 3 last time. What do you have for today?
Okay, should be real simple. I just put my times there on the screen. Hopefully you can see them. And there we go. So I have 6 times for the day. I had 6 times last time, and depending upon whether you're looking at S&P or Dow Jones, for the S&P, I think I hit 5 out of 6. On the Dow, I think I hit 6 out of 6. Okay, here we go. You can trade. It's real simple. If the market is declining into one of these times, look to buy it within a few minutes. Try it out on a demo account. You'll need a 1-minute S&P E-mini chart. And if you rally into the time, you're looking to sell it within a couple of minutes. So there you go. I wouldn't go more than 5-minute window. And if you get into the trade, I would use a 2-handle stop loss, okay? And then look to get out. If draw a little trend line once it starts going your way, and if you break that trend line, you get out. So that's it. And if it's going sideways, like into a triangle or wedgie, sometimes these times will give you the apex of that formation where it comes to an inflection point, and then it'll break out. So that's what we have here. So we have 10:20 a.m. That's a 1-star. 1:18 p.m. That's 1-star. 1:51 p.m. Given that 1-star. 2:03. That's a 2-star. 3:03 p.m. That's a 1-star. And 3:11 p.m. That's a 2-star. These are all on U.S. Eastern Time. That's the same as New York. And let's see what else I can tell you. Let's see. I just look at my instructions here. Yep, I think I've just told you about. This works about 75% of the time. And then the 10% you might get like the wedgie type formation or where it's going sideways. And that's pretty much it. Any questions, Larry?
I think you did a good job. Now, if these work, you'll be on Friday. If not, we'll see you sometime in another lifetime. We'll see you tomorrow. We'll see you tomorrow no matter what. But thanks for coming on. In
case the folks want to get a hold of me today or something, I just put my contact information there on the screen. Okay. And so there we go. And then I'll be back to follow up tomorrow, right?
All right. We'll see you then. Thanks a lot, Norm. We really appreciate it, buddy.
You bet,
put your pedal to the metal on this one.
Yes, sir. Everybody have a great day. Thanks. Bye.
Okay. Not very often people come out and say this is the exact time, and some is for short-term trading, but take a look at it. That's how I got interested in the astrology part. Folks, I want to start the day here with a special chart here. I happened to listen to Steve Rhodes's presentation last night, and I wanted to just to tell you folks, if you haven't had a chance to listen to it, it was really terrific. I mean, I just want to show you this one chart that he started with, and this is about the foreign exchange markets and capital flow. It's really amazing. Look at the left over there, folks, where it's a 28 billion New York Stock Exchange, and look at foreign exchange, 5.3 trillion. About 20% of that, of course, is the euro. But the key to watch here is the fact that if you have $28 billion there, and if you've got 20 NASDAQ stocks that move those 100 stocks, and you got 15 of the Dow stocks, and you got about 40 or 50 of the S&P stocks, for about 100 stocks, you can control what the stock market is going to do. You cannot do that in foreign exchange. It's a mathematical and physical impossibility. They might do it for a short period of time, whoever they might be, but that's not it. But it was a great seminar. Steve, my hat's off to you. He talked about not only the capital flows into market, he talked about the interrelationships of the dollar to each of these, things that we trade, the dollar, the yen, the British pound, and the Japanese yen, how they all fit together and how they all top at the same time. I really enjoyed it very much. I try to listen to all the things on TFNN. Don't always get to because of the time constraints, mainly because of the things I have other things to do, like I try to play poker on Wednesday nights. Anyway, let's move on to the thing. But it was a great thing. It was really it was really quite good. So let's remember that. I've got a couple of things that I wanted to cover. One is I'm going to give you a little description here or something. But first of all, I wanted to bring this up to you on the when we talked about false breakouts and stuff. I wanted to bring this up. This is from Gartley's book. I want to bring this up here. You'll bring it up here. You'll see this is where he talks about false breakouts, and this is how he describes it. You can see these types of pennants and stuff that we're looking at, how the market will go above the area and then below it and then snap back above it. This is what we're trying to see when we're looking at that thing we were watching with the Dow Jones Transportations and also with the Russell 2000. This is where I got that information. He spent a page or two, talking about this, where these are the basis of what he was looking at, because technical people are watching these trend lines, and when they get these breakouts and they're false breakouts, that's something to pay attention to, especially if it comes to a spot where it's really important. Now, some people are saying on the internet that H.M. Gartley, Harold McKinley Gartley, talked about the use of Fibonacci numbers. Boys and girls, that is not the case. I'm going to cover that on the second section here, but he did not mention the word Fibonacci. Now, he was doing this stuff during the same time that Elliott was doing. Gartley died in '69, so he was still doing it because he sold the book Profits in the Stock Market by H.M. Gartley for $1,500 in 1937, and I think he sold 15 copies of that. And I'll cover that at the second session because it takes a little bit more to go through the story of the book and how it, got to the place where it is right now. Now, there's a couple of charts that are extremely important, I think, and one of them, of course, is this Euro contract that we've been watching, and I wanted to show you. Hold on, give me 1 second here if I can find it. What did I do wrong now? Shut the front door and raise the rent. I've got it here something. So dear. Here it is. There we go. I've got it in order here. This is what I'm looking at here in the Euro. I just wanted to show you. This is the weekly chart. We have broken through the 78% level with a gusto. We're trading around 117.07 right now. That's not a very good sign, and with that big downdraft like that, folks, that is not a good sign. And since the correlation with the gold is nearly 90%, it's pretty hard to be long gold in this area. Even though I'm extremely bullish on the technical basis, the way this euro is acting, it's going to be really hard for gold, to really accelerate. So what I did was, it might be a bad mistake, I exited my gold positions yesterday with a small profit. And then I made the sign of the cross, and I said, well, here goes. So I might be buying it back at a lot higher level, but right now I just have to respect this situation that we have going in the euro, especially after watching what Steve Rhodes showed us last night. I mean, it was clear as mud. I mean, it was clear to me. It was not mud. It was very clear. 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of the Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find the Path of Least Resistance under Trading Newsletters.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Thinkorswim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, let's talk just a little bit about Norm Winski's times that he gave here. You know, he's really putting himself on the line here, and and I've watched some of these things work pretty good. When he gives a time there, like you're looking at 10, 20, I guess, get a few minutes on either side. If he gives it 1 minute, I can't look at a 1 minute chart. I'd rather go back to counting pills for Eli Lilly before I did that. But just use it as a guideline. If it comes into the Fibonacci number, and watch it. If it hits there and backs off, then maybe that's the high or low. I don't know. Just look at it. That's all I can tell you. I don't really know any more than that. Now, I wanted to show you, I posted the chart of the, I don't think I did. Did I post a chart of the Japanese yen? I don't think I did. Shut the front door and raise them at just a minute. Let me get it up here. And then I wanted to show you, we're going to discuss this. I'm going to relate it to the gold, because here's what we're talking about. This is a trade that I was doing the other night, and this is why I was so very tired yesterday, is I was watching this really key level here in the Japanese yen, and I bought that at 110.75. That's when I posted it. From that level, it rallied up to 110.95. Then what I did, because I had a 20 pip profit in it, I moved my stop back to break even, so that if it went back there again, I would be out with a, with a risk-free trade. But let me show you what happened after that. This is what's exciting after that, because this is why I was up all night. And that was the fun part. Anyway, let's just, if I can find it. What did I do with it? Oh, boy, this is frustrating. I put these in order, and then when I go to look at them, here it is. Okay, let me get up here. We'll take a look at it. You'll be able to see it. You're going to be able to see the same pattern. You'll go back here. You see where it failed there, where I just spread it out a little bit so you can see it. There's the 110.75. You see it rallied up, and then once it cracked that, look what happened. It just cascaded down and cascaded down and cascaded down. And then it had a 382 rally right up to the old 786 number, and then it started to go down even lower. So that's what I was doing, and this is my problem, is when I'm looking at some of these things shorter term, I get a little bit off center, and I'm not sure if that's what happened in gold or not, because if gold closes above 1,300, I'm most probably going to have egg on my face. I got out of it at the 1293 yesterday, and I'm going to wait and see what happens with the day. I have to respect that euro because the correlation in that euro and gold is like something we haven't seen in a very long time. I know the last few days it hasn't been correlating, but I just have to go with it on the longer term, and that's what I did. It was mainly a judgment call. I'm probably going to be wrong, but, I'm wrong a lot. What the heck? There's nothing else I can do about that. All right, let's get into a couple things that I wanted to talk about. First of all, someone's asking me about the Gartley 222 pattern. I'm going to show you this right here, folks. This is the story behind the Gartley 222. 1967, 68, I'm in California. I'm trading at Conti Commodities. They just moved over from Clayton Commodities right there at the corner of Wilshire. And oh, wow. I can't even think of the street now. Anyway, it was right next to UCLA. Boy, my beeper's going off. Something's good's going on here. Anyway, you'll see it here. Let me turn this off, folks. Give me a second here. I don't know which one it is. Oh, it's a crude oil. This is good. Oh, color me happy. Hold on one second here. Okay, we're on the corner of Wilshire and no, I can't remember the name of the darn street. Anyway, I went over to the Investment Center bookstore. Don Mack was a friend of Twentyman because Twentyman had worked at Clayton Brokerage over at the Howard Hughes building. And then when they built the McCulloch Oil building, Conti took over that office from Roy Longstreet, and Roy Fassel ran it, and some pretty smart guys traded out that office. Mike Marcus was in there. Bruce Covener was in there, both of those guys from Commodity Corporation. Ricky the Rocket Barnes was in there. And there was a lot of people, Gene Onofre, Jay Cross. Anyway, but I went to the Investment Center Book Center because that was the only place you could get really good investment books. Remember, this is 1968, 69, so there was 69. There's not very much out there. That also happened to be the year that Gartley died. And I got to go there, and it was not a place where people went in to buy books. They literally had to search him out. He didn't have internet or anything like that, but he had Don Mack had an incredible investment books. I mean, like nobody else in the world. The next year I met John Hill, who knew Don Mack, and I would start to go down there about once a week. I'd take donuts or bagels down to he, and Jerry Bomering was in there working, and they had a little back room where they had some technical analysis and stuff. But what happened was Don Mack's mother had a really type of diabetes that she needed special pork insulin, and it's not an easy thing to get. Well, I'm working for Eli Lilly, and I'm in the medical department, so I had access to any of that stuff. So I said, Don, why don't you let me take care of this for you? I said, give me your doctor's name for your mother, and I said, we'll just give her a lifetime supply so she doesn't have to pay for it anymore. He says, you can't do something like that. And I said, sure I can. I said, Eli Lilly makes that stuff. And so I called the medical department, and I talked to Dr. Griffith, and I told him, I said, this is what I'd like to have. He says, not a problem. He said, I know Dr. Feinstein at UCLA. He said, he's a good friend of mine. He said, I'll set this up for recurring shipments, and she won't have to worry about it anymore. They'll ship them to her pharmacy, which was Schwab's. They're on Little Santa Monica Boulevard. And from that moment on, Don Mack befriended me, and he took me under his wing and, gave me a whole bunch of stuff. But in 1971, I believe, he was in a really good mood, and he went back to the safe, and he opened his safe, and he pulled out this big 3-ring binder, and it was the original copy of the Gartley book. And it was 3-ring binders, and he told me that he believed Gartley only sold about 15 of these. And they had sold for $1,500 back in 1937, which is equivalent to 3 Ford automobiles. Well, I took that thing over to the Xerox place at 25 cents a sheet, and about $120 later, I returned it to Don, and I just bound it up and just took it back to Westlake Village and left it there in the garage for about 3 years. And then later on, I started to study it a little bit. But the key here is on page 222 of the book, where Gartley takes 2 full pages to describe why markets, you shouldn't try to pick a top or a bottom. You should wait for the top or bottom to be hit and then buy the first ABCD correction or sell the first ABCD correction. But the figure that he put there was confusing because on the right side, figure B, you can see an ABCD pattern where it says sell short. But if you look at the pattern A, you don't see that same thing. He described it correctly, but the diagram was wrong. And that's how I came up with the Gartley pattern, and I named it the 222. I wrote my first article about this in 1976 for Futures Magazine, which was the old, which was Stocks and Commodities now, but it was Futures Magazine back then. And I did a couple for Traders World and some others through that time, and that's how the whole thing started. But that's the whole reason for the Gartley thing, and it works. It don't work all the time, but boy, when it works pretty good. So let's keep a close eye on that. Anyway, that's what we're watching here this morning, and we're going to have to take a little break here, and we're going to see what's going on, and bada bing, bada boom. And I think we're at the point that we're going to have to do with something. I'll be right back, folks. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I had to put this chart up of October sugar. We bought that down near the bottom, which was a 1.618 expansion on the weekly. I focused on that last week and then also in the newsletter. But it's made the first objective. We've been up 9 days in a row, a little over $1,300 profit. So that's my first trade in sugar since Hector was a pup, and that was a long time ago. Let's take a quick look here at the E-mini S&P. We got up here to this old high around 27.32 again yesterday. You'll notice that the move we had yesterday stopped right at the 78% level. So this market is still certainly in a bullish up move, and it hasn't turned. We need to get the S&P below that 2706 level. That would be the key. The key was yesterday was when that NASDAQ came back 140 points. I mean, that's a lot of power. But remember, that's only 20 stocks that's doing that. So that's a real interesting thing to, to pay attention to, because these stocks are cap weighted. When you're looking at about 20 of the NASDAQ stocks, 15 of the Dow stocks, and probably 50 of the 500 of the S&P stocks, you can take 100 stocks and move the market. Easy. And that's because of these indices and everything else. One of the things I did last weekend, and I posted them in here on Monday, I looked at some of these really big stock. Every single one of those are in bear markets, folks. And well, let's put it this way. They're in topping patterns. They haven't really turned down yet. But keep an eye on it, because it certainly could happen. We'll be watching it. We're very, very interesting now in the Treasury bond market. We're approaching some really key levels. The 78% of the previous swing in the T-bonds comes in right around this 143 level. So sort of pay attention to that. It's going to be an interesting one. As you can see here, I'll get this up here because this is from last week, what we were expecting for the rally to come up to. You'll be able to see it. We went down to that 1.618 expansion there at 40, and now we're trading almost at 43. We're up at that 142.28 level. So that should be a key level to look at, and that's going to be very interesting. This is a 4-hour chart, so we're up into that zone, and it equals the rally that we had between the 24th of April and the 3rd of May. So we've gone from the 17th to the 24th. Guess what? That's 10 days. So watch that. There, we're coming into an area that should be some resistance. That doesn't mean there's going to be, but it means that there could be. That's really, the bottom line of what we're watching in here. So pay attention to that, as it might be something of great interest to us as we move through looking at some of these other charts, down the road. And then we will move on to the next question that someone had, and that was about, oh, here it is, about the soybean market. Okay, we're going to talk about patterns, boys and girls. We might as well be like Norm and put the pedal to the metal and get the old skillet out and put egg on your face, because here we have a 4-hour chart of jelly beans, July soybeans, and we have a absolutely perfect 1, 3, 5 pattern coming in here at 1052, I believe is what it is. You have a 61% retracement from the high of 0.1. You got a 78% retracement from the high of 0.3, and you have a perfect symmetrical 175 4-hour periods. Let's see, 4 hour be 4 day. It'd be about 5 weeks in between each one of those. They're absolutely spot on coming in today. Now, whether that means anything or not, I don't know, but this is a completed pattern. So we'll see. Now, look at this chart on July soybeans very closely, because go back and look at the low that we made back on the new moon, back on the 15th. Look at that really nice 3-drive pattern that was there. We were at a 1.79 expansion. We like 1.618, but that difference is only about 3 cents. But you can see the 3-drive to a bottom pattern. It's very, very symmetrical, lines up just the way you like to see it. So that's it. We've had the rally. What it does from here, it's in God's hands, but that's what it looks like. We've been, very bullish on the soybean oil for quite some time, and now's the time to book the profits in it. In fact, we're seeing topping patterns in corn, wheat, beans, and oil. Whether that means anything, I don't know, because it's just a pattern. It has nothing to do with the fundamentals. We have to remember that when we're looking at this. But this is what we go by, is how these markets line up for trades, and that's all you're looking for. You're not looking at any news. People have asked me about the news. I quit watching the news so long ago, or doing anything with the Wall Street Journal. Gosh, I used to subscribe to the Journal, Barron's, all this stuff, and all it did was confuse me. All I want to do is show me what that chart is doing, and I can interpret that. That's the one thing that I can do. It's the only thing that I can do with any type of accuracy, because it gives you a probability. We owe that to Dr. Andrew Lowe at MIT, because he's the one that made it into a science of looking at these patterns, and that's what makes it, so very, very important, at least from our perspective, as we can see here. Since we're talking about the grains, I want to point out this one here that we've been waiting for, and this is this Christmas wheat, December wheat. We're now trading up around 574 this morning. We've taken out the highs of May. We do have a chance up here. The 1.27 expansion is 583. There's several ABCD patterns up at that. If we get above this 573, which we have, you'll notice here that I put this out, that the above 573 sets up a 3 drive at 586, and that's what we would be looking at here. And then if you would, defy human nature, like Mr. Twentyman says, is measure the time from drive 1 to drive 2 and drive 2 to drive 3, and you'll see that you come in with two major ratios at 584, and one is the 1.27 of the BC swing, and the other is the 1.618 of the AB swing. So those are the ones that we're watching as far as time and price. And we have the full moon coming up here right after the weekend, and that's one of the reasons why we're having Norm on the line this week, because he'll be able to give us some pretty good ideas. Now, we're not going to be on the air when we get the first time frame from Norm. I believe it comes in at 10:30, as I recall. And then we will, pay attention to that one. But let me double check. Maybe, Anyway, we'll watch it. Let's just do this together, folks, here in the room. I can't do a 1-minute chart, but just see how close those times are. 10:20. Okay, we got 20 minutes to go. And that is 10. Oh, I'm off the air by then. I only go to 10 o'clock. So you'll have to do that for me. So take a quick look at that and see what happens, and we'll go from that way. I don't have any posts for the DAX or the FTSE today because of a Windows problem that my colleague from across the pond is having. So hopefully we'll have that up and running tomorrow for us. So we'll keep an eye on that particular thing, and we'll see. I don't know what Go Caps means. That must be about hockey. Did Washington win to get into the finals? Is that what happened? Did they beat the team from Tampa? Was that the Tampa Bay Buccaneers? Mark, what's his name? The guy from Fidelity. Shucks, I even met him. I can't even remember. He lives right down the street from Dr. Earl. Dr. Earl, help me. What's the guy's name that built that $10 million house? I can't remember. 877-927-66. Jeff Vinnick. Thank you, Doctor. Thank you, sir. Thank you. Thank you.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Got a request from someone in Fort Lauderdale, Florida, who wants to repost Norm's time. Well, my friend, you're welcome to do so, but get ready to make a Cobb salad, because if it doesn't work, you're going to be pummeled with vegetables at your front door. However, he's right more than he's wrong. That's all I can tell you, and I know Norm would like for you to post it. He believes it. I actually believe it, too. I can't trade that short-term stuff, but, yeah, go ahead and post it. It, gives a little bit of interest, because I believe someday, hopefully before I go to that big casino in the sky, that there'll be a segment on CNBC or Bloomberg, a 3 to 5 minute, maybe even longer, about the attitude towards financial astrology. And boys, folks, there's some people out there that are really delving into it. I can tell you that for a fact. And they're in that Boston area. That much I can really assure you on that. Anyway, let's talk a little bit about Jeff Vinnick. He's the fellow that owns the Tampa Bay thing. It didn't post. I don't know what that means. Oh, I see. You want to know whether repost? Yes, you can go ahead. Can you do that for me, Al? Post Norm's times. I don't know if you can do that for me or not. I hope that you can. All right, let's just take a look, and we'll see if we'll try to do that if we can. Norm, if you're listening, resend it, and we'll get it up here so we can take a look. Okay. There we go. We got it covered. All right, that's a big 10-4. We're over and out. That's mainly what we're watching here. So we'll see what's happening. Well, see those soybeans on that 135 pattern hit the exact number, and now it's backed off about 6 cents. No big deal, but at least it started in the right direction. I don't know if it's going to continue doing that or not, but we'll have to wait and see if it's going to do that. Let me talk to you just a little bit here about these treasury bonds. This is the daily chart here. I wanted to show you that these are this is the rally that I was looking at, somewhere around this 142.20 to 143.12, which is the equal. You can see the equal rallies that are there. So it's very, very close. The first rally took 8 days, and we're in the 5th day of the rally here. Whether that's going to mean very much or not remains to be seen, but it's also a 382 off of the high in March. So I really don't think that they're going to be going very farther on that, but we'll have to wait and see. The crude oil is now down $2.50 from its high that we looked at once. We're at 72.90. Our number was 72.77, and then it backed off quite a bit, and then we'll see what happens from that level, and we'll go from there. One other thing we want to talk about, folks, because this is going to be in the news, so we might as well keep following it, and that is the Deutsche Bank. It doesn't look like it wants to go up. We had a little bit of a rally. It rallied about 12 cents a share yesterday, and maybe that was the major bottom, but it certainly doesn't look like it. And keep in mind that this is the reason why, you know, we have so many counterparty risks out there, because Deutsche Bank's tentacles go everywhere. And that's going to be a problem, I believe. The chart looks just like Lehman Brothers, and just doesn't look good for Deutsche Bank. And they're laying off people, cutting back their, and what they, of course, they do the wrong thing. They cut back their profitable operations is what they do, which is, you know, neither here nor there. So let's just remind ourselves, we got the old beepers going off again. Let's double check and see. I'll bet you I know what that is. That's probably, oh boy, hey, we're getting close on the Canadian dollar, boys and girls. Pay attention to this one, because it's going to be interesting. Ah, dear. Well, the old Cowboys got to get, got a bit, oh boy, just a second. Yeah, I got an alert going on here. This is the hard time, folks, is when I got two things to do, and I got to take care of business first here, because of the fact that I have to put an order in, and I want to be able to do that relatively soon. And then we'll see what happens from these levels, and we'll go from there. Okay, let's move on. Okay, just a minute here. Sorry for mumbling, folks. I got to pay a couple of college education for grandkids here, so give me a second here to get some of these things. I got to turn the beepers off first. That's the main thing. Give me a second. There we go. All right. Question someone asked is about the astrology. How confident do I feel about it working? I know it works. I just don't know what the keys are. I can see little bits and pieces all along, but I don't know what's going to work or why. I have no idea. And, you know, the other thing is nobody else does either. We have some pretty good ideas. I mean, look at the Bradley model. I mean, this thing worked phenomenal. The last 2 years, it's been terrible. That's the first 2 years that we've had it where it's been, you know, absolutely horrible. So, you know, that's basically it. I mean, I see bits and pieces of it. One of the few conversations that I ever had with Edward Dewey was about that he believed that it was very, very associated with the planetary cycles. He was a firm believer in that stuff. So, you know, that's the main thing. And another question someone asked me: am I upset about missing this $6 up move in gold? No, I'm not, because I was in some other things that are working pretty good. So that doesn't upset me. Even if I wasn't in it, it wouldn't upset me. What upset me was that I acted emotionally because of what I saw happening in the euro, and I still have to stand by that, because I mean, I looked at it really closely, and that's what I have to go by. And if I'm wrong, you know, I'm wrong. I have to go back and you know, reassess the way it looks. But that's what, and I may am wrong a lot. You know, the difference between a neophyte trader and a trader that's been trading for a long time, the trader's been trading for a long time, recognizes when he makes a mistake and just gets out of the way and corrects it. And that's what I'm going to have to do. We're above $1,300 in gold now. No question I've made a mistake. Now, what do I do from here is I have to wait and give myself a pattern that will tell me that I'm close again to coming into a really low-risk buying pattern that we had at 1285. Now, I made some little money on it, but I left some on the table. That's always the case, because I never get the high, seldom get the low. So that's it. Move on to the next one. There's a supermarket coming to a place near you, and that's the main thing. Look at soybeans. You know, the July soybeans, we were looking at them at 50.5. The high was 50.75. They're now trading at 10.41. That makes up for the gold loss. So we'll see what happens. Anyway, we'll keep an eye on this to see what's going on. We got the bonds a little bit higher. We'll be right at the 78% level, but want to watch it with a little bit of a closeness, because it is going to be interesting here to see how these things unfold over the next few hours and stuff. Stocks have sold off just a little bit. The interesting thing last night was the fact that the NASDAQ could not, it's hard to believe, but it went to exactly 69.75 to the tick. That was the exact 78% of the move. I mean, I couldn't believe it when I saw it. But everything's going nuts, and it stops right there and never goes a tick higher. I mean, that's why I believe in Fibonacci numbers so much, because you see this more often than not, And that's what gives you the thing. Now here goes the gold. Now they're really going to upset me. 1304. Move on to the next one, Larry. Okay, let's move on here and see what else we've got going on here with some of these other things. The stocks that I looked at, folks, still look bearish. There's no other way that I can see that, other than that. There's I just can't do anything more about that. That's all I can tell you. I'm trying to do two things at once, folks, here, and multitasking is not easy. So what I'm trying to do is to place an order and to do it surreptitiously. 877 927 6648.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I posted the chart of the gold here, where I got out. It's an emotional trade. I did something wrong. I was overtired. And that's the reason, but, I have to live with that. It happens occasionally, and it happens to all of us. So I was going to rebuy it on a breakout above 1,300, but I decided that I'm the worst breakout trader in the history of the world. John Jameson is helping me work through that with some great deal of success, by the way. In that Japanese yen, when it broke down, I was able to profit from that. But I'm just going to wait here and see what happens. And we'll go from there. Yes, I know, Marshall, we made a profit, but the people don't remember that. I lost a good friend at Drexel, folks. So Trevor, I bought gold for Trevor at 202, and we got out of it at 680 in January 4th of 1980, and it went up to 863. He never spoke to me again, and then of course it went right back to 400 right after it hit that. But I thought he was a good friend, but it was all about money. And but boy, we made a lot of money, but he missed that last $190. It only lasted for 3 weeks, but I always remember that. One of the things that my boss at Drexel told me, he says, we're accustomed to losing money, we're accustomed to making money. The two things you don't want to do is don't ever lose everybody's money. You don't want to do that. And the second thing he said is don't ever try to talk somebody out of something that they want to do. If they want to buy gold at $1,300, let them buy gold at $1,300. It's their money. Just make sure that you protect them, but don't ever try to talk them out of something, because they'll never forgive you for that. They'll forgive you for losing, but they won't forgive you if you have a move that that happens and they weren't in it because you talked them out of it. So I try not to do that, very, very often. So that's neither here nor there. So that's the wind-up of the show today. Tomorrow we've got Norman, we call it to the minute, Winsky, and we'll see what happens at 10:20. We'll keep his feet to the fire. Who loves you, baby?
The TFNN Memorial Day Tiger Dollar Special has just been announced. For 1 week only, we're doubling the bonuses that we normally give out with any Tiger Dollar purchase. Normally, when you purchase Tiger Dollars, you can receive a 10, 15, or 20% bonus with your purchase, but through Memorial Day only, we've doubled the bonuses to 20, 30, and even 40%. This is one of the best Tiger Dollar sales that we offer, and they only come around a couple times a year, so don't let it pass you by. Tiger Dollars can be used for any TFNN newsletter or service, and they never expire. So whether you're already a subscriber and want to add savings to your monthly or yearly subscription, or you're thinking about signing up for anything in the future, now is a great time to get your Tiger Dollars. For all the details on the Memorial Day Tiger Dollar Special, visit the front page of TFNN.com before this deal ends May 28th.